Stealing is one of the fastest paths to profitable trading, and every successful trader I know has done it. It can be easy to waste months, maybe even years, trying to reinvent the wheel when you should really just be copying strategies that actually work. In this episode, Pedmer and I are going to reveal exactly how we've stolen ideas from books, Twitter, YouTube, and other traders to help build up our own portfolios. Plus, we'll also cover why some of the best edges can't even be backtested in the first place, and the uncomfortable truth about what happens when you finally make it big. Let's get straight into this. Stealing is your quickest way to profitable trading, at least from my experience. And I've pretty much copied from everyone across the board, whether that be YouTube, Twitter, books. Pretty much all my ideas have originated from someone else, and first by their reading, and then slightly modifying here and there. But in this particular podcast, Pedmer and me are going to discuss why stealing is probably your quickest way to actually get profits on the table and have a working idea compared to just trying to come up with something just from pure market experience. Pedmer, do you want to go over first maybe some examples of things you've maybe stolen or where you've got ideas from in your own trading?
For sure. Maybe I can give just a brief explanation or
Sure.
just what concept. Yeah, about the concept. It's like there's. I don't know if you read the book Reminiscences of a Stock Operator that details like the story of Jesse Livermore. And there you have a phrase that I always like stick in my mind. That is I'm paraphrasing, so don't. Yeah, I'm not 100% correct on it, but it says something along the lines of you have everything under the stock market is known, or whatever, something along those sides. There's not, and what you can take from that is that there's nothing very much new that you can do in markets. Most of the profitable strategies that traders run are all different variations of the same thing, and trying to be smart and trying to find for strategies where others aren't is not a very good idea, at least for people that are starting off. Most of us do the same things that everyone else is doing, just different variations. And you can, all my trading strategies, except a few here and there, have been from taking something from others, like reading a book, reading a blog, reading papers, and implementing those strategies in different variations, let's say. And people get too caught up like on trying to create like the next secretive signal that I'm going. Don't waste time on that. Do the low-hanging fruit first. See what other people that are doing it profitable are doing, and try to implement the same thing and iterate from there based on your own observations. That's literally everything I've done so far.
Yeah, 100%. I pretty much fully agree. I always say, like, especially in your first 1 to 2 years of trading, you've just not seen enough markets to have, most of the time, I'm not going to say this for everyone, at least from my experience, the first 1 to 2 years, if I had no one else sort of guiding me or at least introducing myself into new topics, whether they be small caps, different strategy ideas, you're just going to probably come up with very, very terrible ideas of how you can trade the market. So a lot of the time you have to sift through a lot of different ideas from other people, and then you can just steal the ones that actually seem to work, whether that be you back test them or you forward test them if you're really early in your like kind of trading career. Those sort of things have definitely been the most impactful. But yeah, do you have any examples of things maybe has there been certain books or certain videos you remember back in the day that you kind of went to?
Sure. For sure, I can give you one exact. Let me just correct my phrase from Jesse Livermore. So he said, like, there is nothing new under the sun, and least of all in the stock market. And I completely agree with that. You have so many examples of people that seem like that they run very complicated stuff, and then when you break it down, the underlying thing that they are doing is just the same as everyone else. And I can give you a very specific example. For example, running trend following models on crypto. I took an idea that I saw work elsewhere in other markets, this very basic idea, and I implemented it on a market that was not as, how can you say, as exploited or as with as much volume, not volume, but not as much as exploration as others. So I took a very established model and I applied it elsewhere. That's it. That's basically it. And I've run my book most of my time with that simple strategy, and that's been doing very well. So that's a quick example.
I think you touched on a really good topic there, is that like A really great example of why stealing ideas is a lot faster is the people that worked in TradFi or had TradFi experience, which means just traditional finance, that then moved to crypto. They just copied and pasted the playbook of strategies that worked in TradFi, but then they worked even more in crypto because crypto was more inefficient back in the day. So things like basic arbitrage, all those sort of things worked incredibly well in crypto because it was so early in its like sort of I guess becoming more established as a market. So that's a clear example of why stealing ideas is way more, at least for speed to become profitable, to create something that's working, is a lot faster. Because if they had sat around and looked at crypto and thought, well, we could do this, or I've seen this potentially, that's still great. You can come up with some original ideas, but it is often faster to just come up with something that someone's already working in a different market and you just kind of copy and paste it to another one.
Yeah, and there's this concept in business that you want to go like, how can I say, you want to create a business that there's no competition, and that's not real. In most cases, you want to create a business where there's a lot of competition because there's a market for it. You don't want to go create a business there's no unless you have something very unique that you built up like a Facebook or something, and I'm betting that you don't want to be doing stuff that you don't know you have a business model for. And that's the same in trading. You want to do stuff that works and that has worked for other people and run it in different variations, different markets, whatever you want to do. But my problem always in the past, I took many years to have a profitable year. And my problem was many times trying to go after like chasing rabbits, like chasing stuff that doesn't exist, trying to measure the perfect volume here and there. And at the end of the day, it was all like mean reversion or momentum. And that was it. So
I think that is kind of one of the things though that with early trading is kind of like your rite of passage is you have to sift through a lot of shit. Like there's going to be a lot of things you look at that just when you look back on it make no sense or just were quite obvious that weren't going to work. But because you're early into the trading experience, like really good example at least for me when I first got into trading. I always say this because I think nowadays systematic trading and maybe algorithmic trading has become a bit more popular. But when I first, Googled trading back in, what would that be, like 2018? Yeah, I guess early 2018, etc. There was only support and resistance videos, supply and demand. There was nothing really talking about trend following and momentum or mean reversion, nothing like that. So like I remember my first strategy was shorting at resistance points I had randomly put on a chart, and that was based on like someone telling me that it needs like 3 touch points and random shit like that. That's what it's just ignorance, and there's nothing wrong with that because I was new to it. But a lot of the times you're going to have to go through a lot of those strategies until you find something that actually kind of works. And like the first one for me was I straight up just copied someone else's idea that was trading small caps. They were trading gappers at the time and they were shorting them, and I was like, all right, that looks like something that could maybe work for me. I think back in the day, if I was being honest, I chose it because I thought I could make faster money. There was more volatility, I could buy more shares, sell more shares, etc., because I had a smaller account. But ultimately, what that led me to is that was the first thing that I saw consistently worked, and it was only ever me kind of messing it up. And that's when then I became more systematic, etc. I won't go into the full story, but that was my first strategy idea that I saw worked and actually then continued to work on. This bit of a rant, but this does lead me into the second point, is a lot of people give up on strategies very quick. A lot of the time, I actually had one person message me on Twitter recently. He had backtested, or at least it seemed like he had backtested a very solid strategy, showed really solid returns. But then he instantly, when he went live on that strategy, he levered up like 10x, and he wasn't prepared or wasn't even thinking that the worst drawdown could happen that had happened on that backtest to him. And as it plays out, as always it does, the first couple of months was drawdown, and he blew up a lot of his account because he was so levered up. And a lot of the times people then blame the strategy or, think it just doesn't work. But most of the time it's either based on execution or you're just not prepared to actually deal with that. Strategies, pretty much all strategies I've ever seen and backtested will have at least a month, probably multiple months of drawdown at some point. And that doesn't mean they no longer work. It doesn't mean that you should stop trading it. It's just part of trading in itself.
exactly. I saw this tweet from a guy saying that he uses like the worst drawdown of his historical performance of his backtest to infer when to stop or activate the strategy first. I think that's a very bad idea, to be honest, for a few reasons. But one of them is exactly what you just said, like the historical backtest. It's just an artifact from the past. It's just one path. Like imagine that if the world events happen at a different If you like put the world events into a bag and you shuffled it and took another one and another variation of the same events, like you're going to have a different equity curve, and that's markets. Like there's a lot of variance, and when you use something like an historical backtest to infer, like, oh, if it goes below 20% of the worst drawdown, I'll cut the strategy. Okay, you can do that, but the truth is that the worst drawdown is always ahead of you, and you need to give it time. You need to understand what the underlying effect that you are trying to harvest is really there, if it's really dissipated or not, or it's just the worst drawdown that you ever seen, and the market is changing, whatever. So it's a tough business, man. Trading is a tough business, and you better be copying someone else what they are doing and trying to understand when they go through drawdown, so that you can understand that it's normal for you to be in a drawdown right now, like benchmark yourself against their performance. And yeah, do that. If you are going at it completely alone using weird signals to entry and exit, it's going to be a very hard time for you unless you are very, very experienced, in my opinion.
Yeah, like also kind of just one thing to touch on that is that I remember watching an interview with the AQR founder, I think like Cliff Asness. He was saying that like when they deploy strategies, they're always expecting around half the out of sample results to actually be live, and normally like double the drawdown, etc. He was like kind of comparing with Sharpie ratio and things, but for the most part, that's kind of true. Like you can't expect that you have this backtest, it looks amazing, and then you're going to get the exact same result. Now, when I say that, I always get someone kind of say to me, well, then why do you backtest if you can't like trust the backtest results? Backtesting so much isn't to guarantee that you're going to have profitability or to guarantee you have this X percentage. It's often to like understand the behavior of the strategy, and then also to clear out a lot of the stuff that you just should have never deployed anyway. Like if I hadn't backtested a lot of the strategies I had tested, there would be so many strategies I would have put live with, like whether it be small or a decent amount of capital, that would have just lost. Like 100%, because there were such terrible ideas, and if you test them historically, they just never worked. But then there's obviously been some strategies that have looked great and I've deployed, and then they haven't worked out as well. But the whole thing is, how I look at it is, it's like filtering. Like you're trying to filter based on common sense, logic, how simple it is, all those sort of things that factor into it, as well as also, you know, the backtest results, understanding what's the longest drawdown period it's ever had, those sort of things that you can maybe expect, and just understanding the variance. I think most of the time, like I did a thread about poker comparing it to trading, and the number one thing he said that, you know, poker prepared him for trading was understanding and accepting variance. And a lot of the time, that is really what comes down to trading. Obviously, you need a profitable strategy and those sort of things, but you do need to be able to be very comfortable with crazy variance and crazy uncertainty. You're never going to have something that, you know, someone comes across and gives you a paper and says, this is going to 100% work, you're going to get this X percentage. It's just not going to happen, you know?
Yeah, for sure. I was listening to, before we started recording this, I was in a group chat, and I was listening to these guys talking about backtests, and I completely agree with them. Like backtests are, how can I say, it's a sanity test at the end of the day. To me, many people have other opinions, but to me, a backtest is like the least valuable tool in my tool set. It's a sanity test, is to understand, okay, I can trade profitably this edge, that this idea that I have, but many people, many new traders get it backwards. Nowadays, everyone has access to technology, and they start tweaking with systems and trying to beat the data into submission to give whatever results they want. And that's not how markets work. Markets work, you are selling or buying something from someone or to someone, and you want to know why is someone willing to sell you something cheap and buy something expensive from you. And that's the whole idea. That's 80% of trading research, not backtests. Backtest is a sanity test. I would even add that if you can backtest something, if you can backtest an effect, usually that means whatever you have on the table, it's not that good of an edge. Probably it's just a risk premium or something like that, which isn't bad in itself. I'm not, most of what we do, of what I do is risk premiums, but very specific edge where there's a lot of profit to be made and a lot of alpha, that it's not backtestable. You won't see anyone being able to backtest because there's no data for it. You just have a clear market effect that you're harvesting at that moment, and that's not backtestable.
Oh, this one's interesting. You are right. I think it depends on the context, in my opinion, because like I think in the world of doing crypto, sort of like, especially things where you can have arbitrages, you can do market making really effectively. those things can definitely be true where you can't really backtest it and it makes it even more powerful as like an alpha, right? But in like stocks and futures, you're not going to have something like that, at least as retail, in my opinion. So kind of backtesting always does provide at least some valuable side of things with conviction and also being able to test an idea. Like most retail traders will come up with a strategy based on either their experience or based on a YouTube video or whatever. And then if they don't backtest it, they're not going to understand anything about that strategy. And I think especially for both of us, because we've done a lot of backtesting and we understand a lot of strategies now, it gives you that, as you kind of mentioning, like sanity check. And that's kind of the only reason you really do backtesting nowadays, because most of the time we can kind of detect if an idea is going to be somewhat decent or not. But if you're first getting into trading, at least when I was, I think it's a very valuable tool.
Yeah, I agree that it's a valuable tool. I'm just saying that if you can backtest something, it's not going to be a great edge, usually. What I mean by a great edge is not going to be alpha. It's going to be some risk premium that you are doing something around momentum or whatever. In equities, you said that there's not a lot of those things, and I completely agree with you. I don't trade in equities, I trade in crypto, so it's hard for me to say, like there's alpha here and there. I wouldn't say it if I had, but even if I had, but I heard from this guy, for example, and this is something that you cannot backtest, is from, what is his name? Is that guy that runs information arbitrage or whatever he calls it. I did a thread on him. He's very famous. But yeah, I'll catch the name later. What he basically does is he gets a bunch of he gets TikTok accounts, Instagram accounts, like where the kid can,
I know who you're talking about. I just can't remember his name either.
Yeah, me neither.
Yeah.
And for example, and just to give a context for viewers, is like is trying to find new how can you say it, new like new trends, stuff that kids are using, new ideas, new stuff that people are using, stuff like that, to infer his positioning in certain stocks in the market. And he has a very long track record and does very well at it. And it's quite interesting. And that's stuff that you cannot backtest, because you cannot backtest like going on TikTok, finding that the kids are using these spinners on his hands or whatever, and then you go and buy the company that produces them because you see an inflow of kids that like something went viral, one of those products went viral, and then it goes and buys the company, and in the next earnings, like the company jumps up. You cannot backtest stuff like that, and probably there's a lot of alpha there. If you decompose its returns, a bunch of it is alpha that you cannot get from a backtest. But again, I'm not saying that backtests are not useful. They are very good validation tools. I'm just saying that they come at a later stage in my research process, at least.
Yeah, so I found his name is Chris Camello.
Exactly.
Yeah, I remember. I'd actually talked to him a really small amount. But yeah, he did. I think it was 20K to like 60 million or something insane.
Exactly.
But yeah, okay, like this is why nuance in trading is so important, because I think someone could have like snippet the one thing where it's like backtesting is just a sanity check, right? And like in the right context, that's completely true, and you're completely right that the best things aren't backtestable in cases of like things like this. Now, this though would never fall into the realm of like systematic trading or like algorithmic trading. Like it's not even you can't do it, you know. It is primarily just an informational edge, and he's doing it in a very creative way, in a very cool way. And that's why, like, you can be profitable trading in crazy amount of ways. I always find it a big sign of worry if someone is incredibly adamant that their way is the best for trading, because that's just not true. I've met so many amazing traders that trade completely differently to me, and I've met traders that have traded better than me in the same vertical, and they make way more money. Like ultimately, if you have something that's unique or whatever you're doing in the markets consistently, then you can probably make a really decent living. But it's just very, very difficult. It's a 95% or whatever failure rate.
Yeah, for sure. Yeah, I definitely agree. It's my point is exactly that. It's not backtests are useless or anything. I just find them like it's just a game theory. If you have something that is obvious and it's there and you can backtest it, you are not the first one. Trust me, you are not the first one, and that means that someone is already extracting it at capacity, and you are left with whatever is there. For example, like momentum, you can see that you have like diminishing returns over the years. Like in the 80s, a trading trend on like on commodities and stuff like that was amazing because there was no data available at the time. Nobody used data, just a few people. And so these things are like that. Like again, backtests are good tools to validate, but in my opinion, like what you're trying to harvest comes first.
Yeah, no, it's completely fair. I just don't want to. I always try and when we had these conversations, at least for the podcast, I always try and think of myself at the beginning, and I don't want to. I know when you're at the beginning of your trading, you can be scared off ideas super fast if you hear that it's not 100% effective. I don't know why that is. I think it's because when you're new into trading, you're expecting there's going to be one thing that is perfect, that's going to help your trading. It's going to
Yeah.
instantly make you profitable. And when, I never like to undermine a tool or something like that when it can be very impactful to at least one person, or at least it would have been impactful to me if I'd started doing that earlier. But you are completely right on a business side of things that if you can't backtest, it is probably more likely to be pure alpha. But when you have a smaller account, even if you're just doing risk premiums, as you've done in your career, you can still make a killer amount of money.
Yeah, for sure. Yeah.
Um,
And this is from someone actually that spent, I don't want to exaggerate, but I probably by now spent like 1,000 hours developing like my backtesting infrastructure. So this is from someone that spends a lot of time thinking about this. So I'm not saying that backtest is useless,
Yeah, no, 100%. All right. The next things I wanted to kind of talk about was where else can you get trading ideas? So if you're not going to steal them, what else can you kind of do? I think Robot James tweet summed this up really well. If you don't follow Robot James, he doesn't tweet a lot, but most of the time when he does tweet, it's really useful stuff, and he kind of sums down things really well. His second point is primarily, I'll read it directly. He says, apply things that you know have worked in other markets to new or less liquid markets. So this is sort of similar to stealing in some essence, but it's kind of what we previously talked about where it was like TradFi to crypto. So that one I'll kind of gloss over because we already previously talked about it. The last one is notice unique stuff from your own trading. And I'd say this is where if you have, maybe a couple of years of trading experience, this is one thing that can be incredibly impactful because you have often got enough experience now where you can notice unique things that you can take advantage of, or maybe rarer events like we had the whole jelly thing, or if you had the Trump tariff thing, if you had a ton of experience with macroeconomics before, or even just been trading for a while and have the idea that most things converge back, especially if they're over extremes, that can be an amazing trade. Now, that is most often, at least from my experience, those unique things are going to be rarer. They're probably not going to be as systematic as you'd like, and they're going to be often more of a discretionary trade. I don't know, at least speaking from my experience, I don't think I've ever really found something from my own trading that I've observed and then has been a very profitable algorithmic or systematic strategy. The only thing I could maybe give the exception on there is maybe small cap trading, where small caps evolve quite often. So you can observe new behavior and slightly change your system here and there. But most people mess that up by doing it super fast. So I tried to set a rule of like, I'm not going to modify something for at least like 3 months, give or take, or unless there's something like a crazy outlier that I need to be aware of.
Yeah, agree.
Have you ever observed anything and then like kind of translated it into a strategy or no?
Yeah, I was about to say, like as you mentioned, jelly. I was thinking about it. I think that's a perfect example of what we did. We were trading normally, like we were using a platform, stuff like that, and then that trade came up to us, and we took it, like just from using the platform, and we noticed a discrepancy in what should be in the market and what wasn't, and we took it, and even though it didn't end up we end up break even or something like that at the end. Like we were up massively, and it was just our own like execution inefficiency that made us not make a lot of money that day because we were up a lot.
Yeah, no, I agree. I actually, do you have anything else to touch upon that? I just wanted to actually give a kind of separate point.
No, for sure, please.
One thing I wanted to talk about was kind of like what's sort of a playbook to stealing someone's ideas, because it's definitely evolved now with AI. Because back in the day, this sounds so old. I'm not that old, but like back in the day on Twitter, the old kind of meta was that you would find someone's Twitter that you think has really valuable information. You would primarily try and scrape all of their tweets, and then you would read them. You would pretty
Yeah.
much by hand go through all of them and see what you pick up. And it was a very long and tedious thing, but it was very useful, especially for things like small caps. I remember going through all of Lucas's or Short Bear's tweets. I remember going through a couple other guys, and there's a lot of things you can learn here and there. And like one of the back in the day hacks was that often people would delete their tweets if they were maybe too valuable or whatever. So I would have a Discord thing that basically just saved their tweet into a text channel, and then I could always look back on everything. Like those sort of things were really important. But nowadays, kind of what you can do is a similar idea that you extract all the tweets or whatever you're going to do, and then you just paste it into AI and like, basically ask for a summary or, kind of have a conversation with it and see what you learn. A great one as well as doing YouTube transcripts. When we were sort of getting into meme coins and there was like a decent amount of edge there, I watched a ton of meme coin videos, small creators and big creators, and then basically put a lot of transcripts together while also watching the videos and was asking questions to the transcripts, etc., and getting things like that. And that was quite helpful to condense that learning curve. And I think a lot of times nowadays that can be a very useful trick. The only exception, maybe I'm just being a loser here, but I wouldn't do it to books that much. My success with books at the moment with AI has been very limited. They often give you a very glossed over kind of summary. Now, for some books that can be great, but things like if you put in like Robert Carver's like advanced 30 strategies, it kind of messes things up here and there. Maybe it'll improve in the future. It probably will. But that's probably the only thing where I'd say like books kind of still reading them or at least skimming them can still be more impactful than like putting into just AI and things like that.
Yeah. From actual like people with actual track records as well. And
yeah, correct.
Remember back in the day, like in small caps where you had that guy like all day faders and others talking all.
Yes. Yeah.
You remember? I
Yeah.
scraped all of his tweets, like all of them. And back then it was not, sorry, I was going to say like back then was not that easy to do. That's not true. I was just a bad coder back then. But I developed like a very shitty like scraper, and I was taking all of his tweets, storing it in an Excel sheet and going through them. But these days, do you notice that these guys like all went to their Discord channels and stuff like that and stopped posting like as much as before? I don't see that banter as it was before. Like people actually like telling you stuff on how to trade. These days, I think that type of content got diluted a lot.
Yeah, I also think it's the natural cycle though to some extent that like you'll have people that go on Twitter, especially because now we've been on Twitter for quite a while. There'll be a person that comes on Twitter, starts sharing things here or there. Then they either, it's kind of like three outcomes. They either make too much money and then don't give a shit. That's one outcome. Two, they kind of stop making as much money. So they kind of stop tweeting and things like that. Or three, they just simply get bored and then just they don't really do it anymore. Obviously, there's people that blow up and things like that, but depends on the person, but for the most part, those have normally been the main character types I've seen after someone's been on Twitter for a bit. Because like you'll see, like that was a great trader, Lucas, or the short bear retweeted a while ago. Maybe it was a year ago. He started tweeting some amazing stuff. I think he did like 4 threads, and then he just kind of disappeared. He didn't want to do it anymore. And I think it's because, for the most part, you're not rewarded for putting stuff out on Twitter that much. I think, at least for how I try and approach it, that I tweet more generally accessible things for people. Now, obviously, here and there, like we do on these podcasts, I talk a bit more in depth about certain topics, but Twitter, for the most part, a lot of people are going to get more value from the general sort of wide sort of things. And then the people that want more specific advice can either ask you or find you in different channels, right? Because if you go too in depth onto them, it does feel a bit, I don't know how you'd else say it. It just feels a bit annoying to give away that much kind of like source or give away that much sort of things, primarily for no certain outcome. And also, when you do put out things like that, you're obviously going to get sudden hate here and there. And for most traders that are making a living from trading, it's just kind of not worth it. So I try and keep mine just generally applicable. I try and always just think in the glance of like what would have helped me in the earlier stages, and that's kind of why I tweet.
Yeah, in my view, I think you summed up pretty well. It's like at the end of the day, it's a decision on monetization or of whatever you are posting. Like if you post straight up alpha, like something that is not very, how can I say, very that has a lot of capacity, you are literally shooting yourself on the foot, right? So that means that you're either not able to monetize it, or you just don't want to monetize that edge and you prefer to arbitrage it on the internet for an audience, for whatever reason you have. For example, I want to continue to build brands into the future because I think that's a plus EV move into for a bunch of reasons. Should I post more regularly? Yes. But that comes at a cost. I'm spending time that I could be spending elsewhere, like developing systems, thinking about edges and stuff like that. It's all like a trade-off. And I think a lot of these traders are very private and they make a bunch of money and don't care. anymore, like you said, or they just don't want to share anything because they want to keep hammering whatever they got at max capacity. So it's all about trade-off, I think, in terms of this type of content. And over time, you get also a bunch of people that don't trade at all and are just there to extract. And so you get very valuable content like diluted in all of this noise.
Yeah, no, I'd agree. I think one thing I remember, and I still get asked it, here and there, is like, why do you share things if you're profitable as a trader? I think it normally comes down to the main part of things that one, I can't extract all edges or all things I'm doing. Also, two, as we've kind of talked about in this particular podcast, a lot of my things aren't that unique. I've stolen them from other people, and how have I stolen them? They're publicly available. It's not like we're not doing some magic wizard market making sort of thing that has a +10 Sharpie ratio. A lot of my strategies are quite simple, quite basic, but I've been able to stick with them, and I also have the power of automation and things like that have given me some sort of an advantage on it. And then also, you will be surprised, and I think we've both experienced this, when people make their first 500, a million, etc. Now, I'm not saying those are small numbers. By far, they are not. I'm still working towards my first 7 figures. But the primary thing is, once you do hit it, and let's say you hit it in 10 years, what are you going to do with the rest of your 10 years? Most
Yeah.
people don't have the ambition, and it's why I respect a lot of people that do go on to hit 8 and 9 or whatever crazy amount of figures. Is once you do get that level of safety, man, it's hard to kind of keep that push to kind of, find more ideas, keep on trading this, keep on doing this. Because especially when you get more scale, you can just do basic ass stuff and make a decent living. And a lot of people do that. Like I knew a couple of small cap guys, and by far, let me just give some context here. I'm not saying that everyone gets into trading, makes $1 million, then retires. That's definitely not truth. But the people that do, I did know a couple small cap guys that hit 7 figures and then they basically coasted. One guy went to do a van life. He wanted to travel around in a really kind of swanky ass van and was trading kind of here and there for some living. But he had, 7 figures and, just on basic interest rates, you could make 40K a year or just on a mill. That's, way enough to live in a van and, do some traveling and shit. So like people have other lives and other ambitions. Trading is definitely not, I think, one thing that it's something I want to do for the rest of my life, but by far, am I going to be going after the craziest edges when I'm 50 and I have like plus 7 figures? God, no. I'm going to be relaxing and doing more basic stuff for the most part, at least in my head.
I completely agree, man. This is a taxing business. It takes a toll, and if you want, like, I see myself in my 50s and 60s trading. To be honest, I don't know, but right now I see it. I love the game. I just really enjoy doing this. But on the other hand, like, if you reach like 8 figures or something, will you be risking will you be risking it all on a few like weird crypto edges like that? You won't. So you will place that money somewhere else, and when you have that money coming in each month, like from something that you spend almost no work on, like interest on your cash on the bank or something, it's pretty hard to get out of bed, take risks, take the stress, and continue hammering edges. I completely agree. That guy with the van seems like the perfect life, to be honest.
Yeah, like it's low expenses, and he doesn't need that much income. He's got way enough money saved and all that sort of stuff. Like it's a beautiful life. One thing I will say, this is the last topic for this particular podcast, but you got to really be careful what you wish for, because the big exception here that we kind of talked about, as we've seen with some other traders we've talked about on the podcast, most likely the faster you make money, the more unappreciative you're going to be about how that money was made and how much work took to make that money, and you're most likely going to risk it even more. We definitely saw this with James Wynn. He went from like, what was it? I think he started the account with like 5 mil and he went up to like 100, right?
I think so.
It was like 5 to 100 mil, and if I'm not wrong, I think it was like 60 days less or less. I don't know. I think it was like 3 months, I think, if I remember correctly.
Yeah.
And he ultimately lost all of it, and he left Hyperliquid. I think I saw his like final withdrawal was like 26 grand. Like if you make that much money in 3 months, I'm not saying you haven't put in the amount of hard work, but you haven't had such prolonged stress, right? That's going to make you appreciate that amount of money. If someone, tomorrow gives me 50 million, I'm going to have way less appreciation to that 50 million than if I had to work 30 years consistently to make that 50 million. That doesn't take away from how large that 50 million is. It just means you're probably going to be willing to take on more crazy risks. And at least for Pedmer and I, we've both had quite slow come ups. Like my trading is not like, I used to start trading and I used to think, you know, oh, next year I'm going to be a millionaire. Like these other people on YouTube, like that's not been the case. I'm here 6 years in the game, and yes, I've got past like mid six figures, but it's I'm not at seven figures or anything crazy like that yet. So those things, I think when you do finally hit it, especially if it's taking you a long time, you're a lot less willing to take on that stress, because trading is stressful. No one, if someone says trading is not stressful, they're just crazy. It's not true.
Yeah, yeah, for sure. Stressful, and you have no you have no safety net basically. 1 month you could be killing it on top of the world, like making so much money, and then the next month you don't make anything, or you even lose the entire month that you thought you were on top of the world. So uh, and you have to have that long-term thinking, like thinking in years, like the net profit at the end of the year, at the end of 2 years. That's what you have to think, and it's hard for humans. We don't like losing money, right? We don't like uncertainty, and so there's if I can like leave this episode with one key phrase, it's like there's much easier businesses to do if you are a good trader, but I understand why you would want to be a trader,
Yeah. I like, it's both our favorite things to do. So it's why we can talk about it for like 30 minutes with basically without a plan.
Exactly.
It's what we like.